Can you believe the state of the economy? I'm going to show you how much debt people are in right now. I'm going to look at what has happened over the last while to bring us to this point. I mean, we have seen it go from bad to worse, but why is that happening? I'm going to show you that as well as what you can personally do. Let's begin. Let's talk about the economy first. You could see the average North Carolinian with credit card debt is carrying nearly a $7,000 balance at interest rates that haven't been there since nearly 30 years ago. When you see this, I've been quoting $6,000. In fact, it's worse than I have been telling you all along. This is the average debt, and imagine you're looking at the average annual percentage rate of 24%. It would show you that there is no way that people are going to pay this off. $7,000 with 24% interest is quite significant for anybody to be paying back. And then you have $1 trillion of that. Of course, this is a dramatic effect on people. At the same time, you had the student debt, you had the high level of mortgage costs today that is just going to be added onto the backs of everyone. New factories are coming to the US even as existing ones struggle. So new factory construction is up. But let me show you the actual details of the PMI. So like the measurement of what's going on. And that is 10 months of decline in manufacturing activity. So the actual manufacturing taking place has declined. And here's the charts to correspond to that. This is the US manufacturing PMI in a contraction at this time. And then you have the US services PMI, which is just above contraction, but is actually moving down towards that contraction territory. And so we see this pulling up in the data. This is just another chart form showing us that. Okay, so we do see contraction everywhere you turn, and it's not just in the United States. Okay, this is just showing us China, and you could see it on all of these different levels where it's not necessarily the worst it's ever been, but it's very weak. That is GDP, exports, the CPI, youth unemployment, which some say is as high as 50%, but that's based on some estimates. And then you have the currency in China, of course, weakening against the US dollar, and new loans. Although the new loans have turned around, I believe, since the most recent data, it just shows you that it's everywhere. And that connects in with German producer prices fall at the fastest pace since 2009. That's a good thing, right? We don't want those producer prices to be too high, because then that adds to inflation and on the CPI, the consumer prices. But there's some other things in here suggesting that, there are deeper problems. There are other issues that are going on inside of Germany as well as out. About 40% of German producer prices are now lower than the elevated levels reached last year. Good stuff, of course. And we will see what happens with that. But if it gets too low, well, then you have a problem, because then they're not making what they used to. They start laying people off. This is a sign of a weakening economy, potentially. We just don't want to see it get too far. We'll see. Inflation, speaking of getting too far, I want to talk about that. South Korea, the inflation story is not over. We can get the latest data as it comes through, but after declining for so many months, it started to resurge. So we can hopefully we'll not have to deal with that in every other country. And that was just a one-off for South Korea, and that's it. But a resurgence in inflation would absolutely crush people. And we're hoping that does not occur. All right. Oil price resurgence has further to run after the Saudis turn the screw. And from my understanding, this isn't the end of all of that. It actually takes time. There's a lag. And so we could be feeling more of that. At the same time, Russia has cut oil production as well. So we're going to see if those prices do escalate to the point at which would be an impact on the economy. All right. As I record this video, the price of crude oil for the WTI is at $87 a barrel. This is quite high compared to what we've seen. But of course, nobody really knows where it's going to stop. Some say $150 a barrel for so many different reasons. And we will see how that goes. Natural gas, of course, another issue. a long-standing issue between Russia and Europe. I wonder how that's going to unfold throughout this while. I want you to know that $150 a barrel oil is something that has happened briefly before, but it just shows us that this would, of course, crush economies. There's certainly no question about that. The economy is weak by so many different standards, and it's a global issue for most countries, all right? So you got to look at the companies that are at most risk right now. There's changes that are going through, and we'll talk about that in a second here, but keep an eye out. As you look at the global economy, they do this split into different ways, but $156 trillion in US assets. And this is just showing us the baby boomers and the Generation X and so on. And you can see where the breakdown of that wealth is, a lot of it, of course, being in real estate. And so that just gives you a perspective of the economy, because we talk about economy all the time. But it's important to know where that money is and where that wealth is. And for a lot of people, it's in real estate. It's in their personal residence by far. So any impact on real estate prices therefore affects the economy as a whole. So right now, real estate price is extremely high. And we see that, of course, in many countries. Any change to those prices would, of course, affect their wealth, their well-being, and so on. Consumer sentiment, right? This is a big change. Now, this is talking about Amazon versus FTC. This one scenario could scare investors. I've talked about this before, the regulations on these type of different companies in the tech industry, but others as well. The FTC is reportedly prepared to file a massive antitrust lawsuit against Amazon, potentially leading to the breakup of the conglomerate. Okay, and so that's very important. This is a very, I would call it an unregulated type of environment with tech companies. And so any type of regulation will have a material impact on their bottom line. So when I look at this, I think immediately that people should wake up to the reality of it. And just in a circumstance here, this, if you're an Amazon investor, you're thinking of getting your 7 shares of Amazon, you've got to be careful. That's all I am saying. I found this because of the alerts that I get with Seeking Alpha. It's a very easy to use website that I have, that I've promoted before. And when you are signed up to them, anything to do with the companies that are part of your portfolio, you have the option to basically get those emails that come through. I got this one. I thought it was really important, especially how we look at the relevance to today's circumstances. If you want Seeking Alpha, you want to check it out, the free trial and the $50 off. I put a link in the description. Definitely check it out. At least get the free trial, play around with it. Link in the description. We have this. Apple first became the world's most valuable company in 2011 and has, for the most part, held on to the title ever since. But analysts say that it could change soon. And who's going to overtake them? That's right. Alphabet, as in Google, and Microsoft. But why? Why is that the case? That's right. And Amazon as well. Why? Because of AI. All right, AI, we've heard it all before. We know this all before. Again, unregulated. Any regulation that they're pushing for right now is going to slow down this advancement of AI. But at the same time, of course, Apple is going to do AI things. They're all getting on it. They're all getting on this bandwagon. So watch that. When you're putting your money in to any one of these investments, be careful with regulation. Be careful who they're affiliated with. Okay, because if they're reliant on another company or another type of energy source or something, that could have an impact on that particular company. Okay, so what can you do about all of this? What are you going to do? Let's talk about that really quickly here. Countries holding valuable resources are attractive at this time. That's what we want to have. That's where we want to be. You got to watch the exposure to companies at risk. So in that case there, we're talking about Amazon, but there's a lot. If they're going to say, we're going to shut down coal, do you want to own the coal company? Or do you want to look elsewhere? It's up to you how you want to play it. Invest in real assets to basically to weather any storm. During these times, we have difficulties, and when you have real assets, you can take a beating for a little while. This will result in basically a stabilized environment for you during those periods of difficulty. So hold real assets always and forever. If you want to get in touch with me directly, this is the place to do it. It's Discord. Discord is like a chat service where we can always communicate between us, and I find it very interesting because I'm seeing what other people are chatting about as well. You can join for free. Click that link in the description. And comment of the day. Thank you, David. Agreed that we need to become self-sufficient and not reliant on the government. It's all coming. Thank you very much, Angie, for your comment. Yes, we must be self-sufficient as individuals, of course, as countries too, but as individuals, we need to do what we can, become self-sufficient, try to increase our income. These are the two pillars of prosperity. You can do it one way you feel comfortable or both. These are the things we need to take advantage of right now while we can. I hope you appreciated this video. I'll see you on the next one. Take care.